Hello and welcome to the brand new ET Money Show, where we'll not only help you to invest and grow but also splurge and live a secured life. I'm Shrishti Sharma, and today we are going to have a very interesting discussion. LIC IPO is a much awaited one. That's the mother of all IPO, and this mega IPO and this particular brand is a well-known brand. We all are aware. It's a household brand, I would say, because LIC actually garners around 10% of the Indian household savings each year, and that's a lion's share. Not just that, it is a very big investor, because if you say, then the LIC stake in the Indian market is at 4% as of 30th September, and the total AUM is around $520 billion. But the big question is, going towards the IPO, as we are getting close to it, will you be looking forward to invest and go and subscribe for this particular IPO? Should, as a policy holder, you will be looking, and should you be actually saving funds so that you can go and subscribe this IPO? What is there for the basket? And to discuss all of that, to get this big question, the answer into this, we are being joined by an expert, and today we have Digant Harya, who is the co-founder of Green Edge Wealth. Thank you so much, Digant, for joining us today on ET Now. We always keep calling you, and specifically to discuss on this mega IPO, as you have been tracking a lot of it. On ET Money Show, we try to keep things a bit simple, and especially for the retail investors. Firstly, because it is a well-known and a household brand, what are the advantages and what is the moat basically for LIC, and what are the opportunities that one should be looking forward to going for the IPO?
Yeah, hi Srishti. Thank you for having me on this show. So as you rightly pointed out, it's a very big IPO. There's a lot of excitement. It's a much awaited thing. It is probably India's largest company, larger than even the State Bank of India, and any company you can think of. So surely nobody can ignore this IPO. But see now, whether somebody should invest in this IPO or not depends on the first and the foremost thing it depends on is that how, at what price are you getting the stock. If you are getting a stock at a price which is, say, very attractive versus what the business potential of LIC is in the future, it makes a lot of sense to go ahead and subscribe to the IPO. So I think a month back, when there was a lot of excitement, we were all talking of 10 to 15 lakh crores of valuation. At that valuation, it looked like a little bit of stretch, because though LIC is a big company, it's a mother of all IPOs, LIC still does not have the profitability that private sector insurance companies have. And so I would not want to value LIC at the same rate. But I think today I read a report which says that LIC will come at a valuation of 6 lakh crores. So 6 lakh crores is a very, very attractive valuation. And at this valuation, there is very little to complain. You can straight ahead go and subscribe to the IPO. Like, I have never been so upfront in saying that, yes, you should go and subscribe. But 6 lakh crores, if that is a real valuation at which the IPO comes, I think everyone should get their hands onto this IPO and at least subscribe to a small amount to start with.
You have given us a picture how big LIC is, and if it is coming at a valuation of around 6 lakh crores, then it is an attractive valuation and a price that one should be entering for. But LIC is a giant, but it is also a PSU. And over the years, we have seen that no comparison to the size of the AUM, but profitability comes into play when we have other players in the private sector. Like in the listed space, we have HDFC Life, or for a matter, SBI Life as well. When we talk about LIC, what are the advantages that LIC is holding, but in comparison to the private sectors, where are they taking the step ahead and the lead forward?
Yeah. So I think the first and the foremost thing which is in favor of LIC will be that it will come at, say, one-time embedded valuation, okay, or one-time EV, versus a private sector player which is thrice as expensive. So when you are investing in a stock, the starting point of stock really matters. So LIC is definitely coming at a very good valuation. So the next question will be that can LIC compete or become as good as the private sector players? Here the answer is not so straightforward. So there are 2 or 3 areas where LIC is better than the private players. So let's say that LIC has an agent network of 13 lakhs. So that's more than the combined agent network of all private companies put together. And they reach not just the metro cities, but they reach the length and breadth of our country. So LIC can really source policies if they decide to go aggressive. Second is that LIC's customers are very, very loyal. Most of them have 10 to 20-year outlook. So they keep on renewing the policies without lapsing. So that persistency ratio of LIC is as good as a private sector player. So these are 2 areas where LIC is as good as a private sector player. Now I'll come to 2 or 3 points where LIC is much weaker compared to a private sector player. So the first is LIC does not have all the new age insurance products. By new age products, I mean the ULIPs, which are market linked insurance plans, uh, credit risk, the credit risk products, and so on and so forth. So I think that LIC has to really launch these new products. These are the new products that the young India wants, and it's going to be a 5 to 10 year journey. It's not just that they can go ahead and do it tomorrow, but if they are able to do it, I think we will make handsome returns on this stock. And lastly, see, the government as a promoter, you can never be sure that the interest of minority shareholders is a priority. So that is always a risk, but I think some of that gets compensated with the attractive valuations.
Highlighting all those factors where LIC is taking the lead, has taken the lead throughout the years, and going forward, what are the opportunities where they can actually compete with the private players. But my last question to you is on the return expectation, and whether as a person, if I have to deploy my money, should I be looking to go and buy a LIC policy, or rather invest or subscribe to the LIC IPO and have some return expectation as well? What will you be doing?
So this is, I think, the most interesting part of the discussion. See, India invests in LIC mostly for guaranteed returns, that, I'll pay so much money today or I'll pay so much money every year, so that after 20 years or after 15 years, I get so much money back. So LIC is more of an investment for an Indian. But, I would just like to point out here that if you are investing in LIC in a 20-year policy, you roughly earn, say, 5.5 to 6% IRRs over that 20-year period. Now, this 5.5 to 6% is post-tax returns that you enjoy, but there is a lot of guarantee attached to it. So LIC investments are important, but if you are young and if you are looking at growth, your growth of your wealth, then equities is a much better asset class. So for example, in the last 20 years, Indian stock markets have given around 13.5% pre-tax returns. So post-tax, that will work to around 12% returns, which is twice the return of what an LIC policy can give you as an investment. And 2x the returns over a period of 20 years, it means, in LIC, your wealth will grow up, say, 4 times, but in the stock, the wealth can grow up 15 times. So that is how, this compounding works. So I think everybody should have a balance between how much of fixed income but low return kind of corpus they want, and how much to be put in growth. If you are not investing in the stock markets at all, maybe LIC can be a good starting point, because we are not buying the stock expensive. You will be comfortable with the name. And the biggest strength of an LIC policy holder is that he really has a long-term outlook, because LIC has no policies which are 1 year or 2 year old. Okay, so every LIC policy holder has a long-term outlook. So automatically he will do well in the stock markets if he can demonstrate the same kind of patience in the stock market. So LIC stock can be just one of the starting investments, and over his journey, if LIC is launching a ULIP kind of a product, they should invest there, because the ULIP product is eventually going to invest in the stock markets, and that can give you much more returns than the 5.5 6%,
Yes.
which traditional LIC plans can give.
Okay.
So I think both, you should always do both. It's not just this or that. Yeah, that's
Yes.
it from.
Okay. Thank you so much, Digant, for joining us today on ET Now.